Hi everyone, and a huge welcome to this full course on practical bookkeeping and accounting for beginners. If you've ever wanted to understand how businesses really manage their money, you are in the perfect place over the next few weeks. We're going to dive deep into the world of finance, but don't worry, we're keeping it simple, practical, and honestly, pretty fun. In this series, you'll learn exactly how real businesses record, track, and report their financial transactions, step by step. We'll start from the very beginning. So even if the word accounting sounds a little intimidating right now, I promise that by the end, you'll feel confident and capable. My goal is to strip away the jargon and make accounting accessible for everyone, even if you're starting with absolutely zero experience. So, how are we going to do this? Well, I've designed this course in short, easy-to-follow 30-minute modules this way. You can fit learning into your busy schedule without feeling overwhelmed. Each module is packed with value. We'll start with some theory to build a solid foundation, then immediately apply it with real-life examples from businesses you probably know. After that, it's your turn with hands-on exercises to practice what you've learned, and to make sure everything sticks, we'll have a quick recap at the end of each session. You'll progress smoothly from the basics of bookkeeping, like how to record a simple sale, all the way to preparing full financial statements, just like a professional accountant would. We're talking about the balance sheet, the income statement, and the cash flow statement. You'll learn what they are, why they matter, and how to create them from scratch. This is a hands-on course, so get your favorite notebook or open up a spreadsheet, because we're going to learn by doing. I want you to remember that accounting is not just about numbers. It's the language of business. Learning it is like unlocking a superpower that lets you understand the health and potential of any company. It's an incredibly valuable skill, whether you want to manage your own business, boost your career, or just feel more confident with finances. So, are you ready? Let's begin this journey together toward mastering practical bookkeeping and accounting. I'm really excited to have you here. Welcome once again, and let's get started with Module 1. Make sure you subscribe so you don't miss a single lesson. Thanks for watching. Welcome to Module 1 of our course, Practical Bookkeeping and Accounting for Beginners. In this very first lesson, we're diving straight into the foundation of accounting. Often called the language of business, we'll uncover what accounting and bookkeeping truly mean, understand their importance, and see who actually uses all this financial information. So, what can you expect to master in this module? By the end of this lesson, you'll be able to clearly define both accounting and bookkeeping. You'll also learn to identify the different uses of accounting information and understand its purpose. We'll pinpoint the key differences between accounting and bookkeeping, get comfortable with basic accounting terms, and finally, I'll walk you through the fundamental steps of the accounting cycle. When you feel prepared, let's jump right in and start building your foundation in accounting and bookkeeping. Let's get started. Ever wondered how businesses, from the tiny corner shop to massive corporations, keep track of their money? How do they know if they're making a profit or a loss? It's not magic. It's all about knowing where the money is coming from and where it's going. And that, my friends, is exactly what accounting and bookkeeping do. Welcome to Module 1, Introduction to Accounting and Bookkeeping. So, what exactly is accounting? Think of it as the language of business. It's the whole process of recording, sorting, summarizing, and then interpreting all the financial activities of a business. In simpler terms, accounting tells us the story of a business's money, how much it earns, how much it spends, what it owns, and what it owes. The main goal here is to give useful financial information to people who need to make big decisions. We're talking about owners, investors, banks, employees, and even the government. Let's imagine a guy named Ton starts a small grocery shop. Accounting is what helps him track every single transaction. It's how he can clearly see if his shop is growing and making money, or if it's struggling. This information is gold because it helps him make smarter choices for his business's future. Now, you've probably heard the term bookkeeping. Is it the same as accounting? Not quite. Bookkeeping is the foundation of accounting. It's the day-to-day work of recording all the financial transactions. It's the nitty-gritty of tracking what comes in and what goes out. You can think of bookkeeping as the data entry part, while accounting is the analysis and big picture part. Here's a fun way to remember it. If running a business were like making a movie, bookkeeping would be the cameraman, capturing every single scene, every detail. Accounting, on the other hand, would be the director or the editor, taking all those scenes and putting them together to tell a compelling story about the business's financial health. Both are crucial, but they play different roles. So, who are these people who rely on accounting information? We can split them into two main groups. First, we have internal users. These are people inside the company, like managers, the owners themselves, and even employees. Managers use this data to plan, control, and make daily decisions. Owners want to see their return on investment. Then we have external users. These are people outside the business, like banks, investors, customers, and government agencies. For example, a bank will look at a company's financial records before deciding to grant them a loan. Investors will check the financial health before putting their money in. If our friend Tund wants to get a 1 million naira loan to expand his shop, you can bet the bank will ask to see his financial statements first. Those statements are the report card of his business, all thanks to good accounting. All right, before we go any further, let's get familiar with some key accounting terms you absolutely must know. First up, a transaction. This is any business event that involves money. Simple things like buying goods, selling a product, or paying rent are all transactions. Next, we have assets. An asset is anything of value that the business owns. This includes things like cash in the bank, the products on the shelves known as inventory, or equipment like a delivery van or a cash register. On the flip side, we have liabilities. A liability is what the business owes to others. This could be a bank loan or money owed to suppliers, also known as creditors. Then there's equity. Equity, sometimes called owner's equity or capital, represents the owner's personal stake or investment in the business. It is what is left over for the owner after you subtract all the liabilities from the assets. Finally, we have revenue and expenses. Revenue is the income a business earns from its sales or services. Expenses are all the costs of running the business, like salaries, rent, and utility bills. Here's a simple way to remember. Assets help bring money in, while liabilities are obligations that take money out. Now, let's talk about the accounting cycle. This sounds technical, but it's just the step-by-step process that businesses follow to record and report their financial activities. It's a loop that repeats for each accounting period, whether that's a month, a quarter, or a year. The cycle starts with identifying and analyzing transactions. Did we make a sale? Did we pay a bill? Once we identify a transaction, the next step is to record it in what's called a journal. Think of the journal as the business's financial diary. From the journal, the information is then posted to a ledger. The ledger groups all transactions by account type, so you can see all the activity related to cash, for example, in one place. After that, we prepare something called a trial balance to make sure our books are, well, balanced. Once we're balanced, we can create the main financial statements, like the income statement and the balance sheet. These are the reports that tell the final story. Finally, we close the books for that period and get ready to start the whole cycle over again for the next period. So, if Tund records his daily sales and expenses in his journal at the end of the month, he can follow this cycle to summarize everything and find out his exact profit or loss. It turns a pile of receipts and invoices into a clear picture of his business's performance. Let's walk through a super simple example together to see this in action. Imagine Tund starts his shop by investing 200,000 naira of his own cash. What happens? His business's cash, which is an asset, increases by 200,000. At the same time, his owner's equity, his stake in the business, also increases by the same amount. The system is balanced. Now he buys goods to sell for 80,000 naira and he pays with cash. What changes? The business's cash asset decreases by 80,000, but another asset, inventory, increases by 80,000. The total value of his assets hasn't changed, it's just shifted from cash to goods. Next, he sells some of those goods for 100,000 naira in cash. His cash asset goes up by 100,000, and his revenue, or income, also goes up by 100,000. Notice how every single transaction has at least two effects, but it always keeps the financial system in balance. That's a fundamental principle we'll explore more later. Okay, now it's your turn to think like an accountant. Here are a few quick exercises. Imagine you are Tund. First, you borrow 50,000 naira from the bank. Second, you pay 10,000 naira for shop rent. And third, you withdraw 5,000 naira for your personal use. For each of these, just think about what accounts are affected. Do assets, liabilities, or equity increase or decrease? Pause and give it a try. Let's quickly recap what we've covered. We've learned that accounting is the language of business that records, interprets, and communicates financial data. We've seen that bookkeeping is the essential first step of recording daily transactions. We've also defined key terms like assets, liabilities, and equity, and we've seen how transactions affect the financial position of a business. You've taken the first big step into the world of accounting. In our next module, we're going to dive deep into the heart of it all, the accounting equation. It's the formula that holds everything together. So stay tuned, keep practicing, and I'll see you in Module 2.